Good morning and welcome to MBA batch of Luth Mata Institute of Management Studies, LIMS Business News. Let's get the news rolling with the top 6 business news.
Yuvraj Singh invests in nutrition healthcare startup Wellversed. Former cricketer turned entrepreneur Yuvraj Singh has invested an undisclosed amount in Wellversed, a full-stack nutrition brand. The pre-Series A investment from Singh's YWC Ventures values the 2.5-year-old startup at Rs 100 crores. According to the company statement, with the funding, Wellversed valuation has hit 100 crore rupees. The startup owns the popular keto brand KetoFi. The two-year-old startup founded by Anand Kurma, Aditya Seth and Ripunjay Chachan claims to have grown by 250% in last 1 year. The company said that almost half of its revenue, which is 40%, is through direct-to-consumer selling through its websites. Its products are also available on e-commerce sites like Amazon, Big Baskets, and others. With the latest investments, the company now plans to extend to newer markets, invest in technology and research and developments.
Samsung aims to grow biz by 40% this season. Samsung India has decided to take the Chinese threat head on this season. Toppled by China Xiaomi 3 years ago, the Korean chaebol has effected an all-round plan to get its mojo back. Armed with a new product lineup, innovative consumer finance, discounting schemes, and a seamless omni-channel strategy, the brand has set an ambitious target of growing its sales by 40% in the festive quarter over last year. Two senior executives said. This is the most exciting quarter of the year, and we are aiming to grow by 40% year on year in value terms. To achieve that, we have already set a range of activities in motion. Firstly, we have refreshed the entire mobility portfolio since July and have put in place consumer platforms and campaigns that make Samsung products more affordable, said Asim Versi, Senior Vice President, Samsung India.
This is reporter Parvati. Today's headline is Shapoorji Pallonji Group submits plan to Supreme Court for separation from Tata Group. The Shapoorji Pallonji Group has proposed that its stake in Tata Sons be swapped for a pro rata stake in the Tata Group's listed companies. It has also proposed that its share of the Tata brand and of unlisted group companies be settled in cash or in marketable securities. The proposal, which is set to intensify the battle between the estranged partners who are also among the country's oldest industrial groups, has been submitted before the Supreme Court, the SP Group said in a statement on Thursday. The move comes as the Supreme Court is set to resume hearings early next month on the SP Group's decision to pledge its stake in Tata Sons and raise cash and fund of its various business. The court has stayed the move following a petition by Tata Sons in September. The SP Group has responded to the stay by formally calling for separation from the Tata Group. SP owns 18.37% of the Tata Sons and it is the largest non-Tata shareholder.
Hey, it's Lakshmi representing Group 3 with today's news. Airtel bats for hike in voice data rates. Voice and data tariff need to go up as current rates are unsustainable, Bharti Airtel Limited Chief Executive Gopal Vittal said. Addressing analysts at a post-earnings conference call on Wednesday, Vittal did not give a timeline for a tariff hike, but expressed confidence about higher prices in future. Vittal said that telco aims to achieve an average revenue per user of 200 rupees and 300 rupees eventually. Airtel's ARPU rose to 162 in September quarter from 128 a year ago and 157 in the June quarter. Vittal said Airtel will continue to focus on serving quality 4G customers, a trend seen in the September quarter as well. During the quarter, the telco recorded a sequential growth in 4G users of 14.4 million to 152.7 million, up 48% from a year ago. Airtel now has 440 million users in 16 countries. Vittal said the company is studying the low-cost smartphone space adding the telco is yet to decide on the approach and is focusing on migrating its 2G 3G customers to 4G network. In August, Bharti Airtel chairman Sunil Mittal too had pitched for higher tariff, calling the current rates unsustainable. Airtel's ARPU he said, is expecting to cross 200 in 6 months due to higher digital content consumption. Mittal said the rollout of 5G technology will take a few more years as India has an undeveloped ecosystem. He said the reserve prices of spectrum enabling 5G services are unaffordable and act a deterrent for 5G implementation. Thank you.
Group 2 News Reading Report Future Reliance Deal Bombay Stock Exchange to console SCBI after Amazon's objection, says report. Amazon on 25 October won an injunction from a Singapore arbitrator to halt futures deal to sell retail assets to Reliance. A Bombay Stock Exchange source said it will consult SCBI about its stance to the deal and the exchange later on Friday. The Bombay Stock Exchange will consult the market regulator and seek clarification from Future Retail and Reliance Industries about their 3.4 billion transaction following Amazon's objection to the deal, an exchange source said.
I am Alan Ball. Welcome to today's business news. Infosys turns carbon neutral. Implications for Bengaluru. Infosys Limited, one of India's largest software exporters, has turned carbon neutral, allowing it to effectively lead the battle against the threat of climatic change. Longevity and success for a company comes from living in harmony with the context in which it operates. N.R. Narayana Murthy, founder of Infosys, has said in a statement on Wednesday. This is a good time for policymakers to pivot from traditional power generation and speed up out-of-the-box thinking. Deepak Sri Ramakrishnan, Associate Director at World Research Institute WRI, said. The city planners are widening the road by chopping trees for smoother traffic flow. Infosys should speak out against this, Reddy said, adding that the government will listen to companies. Infosys may have initiated sustainable goals, but Bengaluru city administration and government are yet to see this, let alone catch up. Thank you.